Good evening. Welcome to Option Center. Welcome, everybody. We are here on Sunday, November 5th, 2023. Everybody, thank you for joining us. We're going to put our trader hats on because that's what we're all about. We're going to switch back and forth between bulls and bears on this video. Okay, I've been bearish for a long time. I still have that bear structure in mind while making this video, but we have to put the bullish scenario in perspective. So we're going to stay neutral. I'm a bear, but we're still going to stay neutral and look at the situation from both points of view because it's super important in the near term. So whether you're a bull or bear, we have a trend on the way. So you got to make money. That's the important part. All right, so if you're new here, go down to that bottom right-hand corner, hit that Option Center logo and subscribe. And don't forget to like the video. Anything that you do, if you do anything, please like the video. It helps us out so much. Okay, so we're going to go through SPX on multiple time frames. We're going to check out SPY so we can translate that into trading terms because most people trade SPY. And then we'll check out QQQ. And if we have time, we'll do the VIX. Tomorrow, we will do, we'll run through the bull and bear scenario, the alternate scenario in my primary scenario on all the big tech stocks like we did on the weekend video. So we'll run through those quickly tomorrow. But right now, super important information on the indices. You know, we're not going to look at IWM. IWM was clearly oversold for so long and it's bound to get a bounce. But will that bounce help bring the market to new highs? Or is it time to reverse? I'll show you both scenarios. Okay, here we go. SPX on the monthly time frame. We hit major tops here. That gave us a clue that, hey, this top is in and we have a major correction coming. But we're going to keep in mind because look at this. We have our correction. We had our consolidation area for months and months and months. We showed it. It's a ascending triangle that we broke out from. See that doji monthly candle right at the 20 period moving average? Broke out from there. Nice, huge moves. Reversed. And look exactly where we're reversing now. We're reversing right back off that 20 moving average and also this consolidation area. Big push. Now, the month has plenty of time to go. We're inside month so far, but this is a spinning top. So do we get above that 40? We're just going to call it 4,400 area and continue, or we're going to break down. That's what we're going to try to show today. We're going to show both scenarios. Let's go ahead and show just one indicator. I'm not going to go too far into it. You notice we're going into we're heading downward. The RSI, you know, barely on that 40. So if we're bullish, that's a great place. You know, the 40, we don't go too deep. If we're still in the bull market, we bounce off the 40 and continue to the upside. Notice that we're pancaked right here in the bullish territory. We don't have a bearish crossover, and we don't have that the histograms. We didn't go below it. So we have some work to do. If we're the bears, we have work to do for the bulls, but this is a bullish stance in the bullish territory, being neutral above, trying to make a higher low. That's a win for the bulls. Bouncing out the 40 RSI, that's a win for the bulls. The slow stoke heading downward, but it's starting to slow. That's a win for the bears. All right, so you see the mixed signals. We're gonna look at that in the weekly time frame as well. All right, moving on to the weekly. This is what we've been looking at We've been looking at a channel from the top to bottom. A, B, C would be our bearish scenario, our least bearish scenario. Okay, this one at this point says that this is a 1, 2, 3, 4, 5 for an impulse 1, and that we're coming back for a wave 2. We get a 3, 4, 5. That would give us an ABC. Correction's over. Done. We're going to look later on at QQQ. QQQ puts a wrench in this kind of mid scenario where it's not too bearish. It's not bullish, not too bearish. So now I'm convinced from the information that we have that we either have that this one is not valid. Okay? Not going to cut it out. I'm going to keep this on the weekly so we keep looking at it. But now I'm pretty binary. Not pretty. Now I'm binary. This is going to be a bearish scenario where this is a 1, 2, 1, 2, 1, 2. Really deep pullback. And we continue lower, much lower. Or, and I'll show you this on QQQ in the lower time frames. We're going through SPX right now. But I'll show you this on Qs, on the triple Qs. So, or this is bullish. And I told you guys on the what if the bears fail video, and I'll post that as well. I'll put that back on this video, a card above or at the end, where this is a wave 1, 3-wave move up for 1, 2, 3-wave move up for 3, 4, and we're trying to finish off with wave 5, so we have higher to go. We're going to make new highs. That's the bullish scenario. All right, and quickly looking at the indicators here. So we had our bearish crossover, right? That's bearish. We're still underneath. We could just check back to the blue line, head lower, but we're bouncing off the 0 line. This one is this is neutral. Stands either way, but we're in bullish territory. I almost want to give the check to the bulls, but this is neutral. We're clearly getting a bounce off that 0 line, but we haven't made a bullish cross. This is the weekly time frame. Weekly time frame got oversold, huge bounce back into the 50 area. So certainly neutral. This is certainly a neutral position. We could head lower. But it's hard to say. But what the slow stoke is saying is we're barely getting our off the mat. Okay, that we had a bullish situation, a positive divergence here, and we're starting to play out. We got a crossover, and now we're going to make new highs. That's what the slow stoke. This is a check mark for the bulls. Neutral, bulls. You see where I'm going at? It's pretty crazy. It's I'm such a bear. We're in a bearish structure, and I'm going to get to that when we get down to the lower time frames. Keep that in mind. So let's go down to the daily time frame. Trend is our friend, and let's really start to dissect what's happening. Okay. On the SPX, I'm going to draw this out for you. I'll actually show you on SPY so we can really get into it, but I want to show you, first of all, we're looking for a pullback no matter what. Last video that I put out was really aggressively saying, hey, we're done here. We're overbought on the lower time frames. We are extreme. It's not going to go further to the upside. I mean, a couple of points or whatever, divergence. That's not what I'm talking about. I'm saying we have no significant move to the upside happening until we get a higher low. And I think that's what we're going to work on now. You notice in the white, we have this 200-day moving average. That's been key in this situation. We broke down from that 200. Remember when we broke down from the 200 here? Gosh, it felt so bearish, and then rips to the upside. That's what we did, even stronger this time. So we have to put our trader cap on, okay? I'm a bear. And the reason why I'm a bear is because we are in that type of situation. in the higher time frames where we're either going to go lower from here, or we're going to make a new high and go lower, and a lot lower. All right. That's what I have in mind. And I know I have this big bull scenario. So we'll break that one back out if we start to break above our levels that we're at now. Okay. There is a bigger bullish scenario, and that is to just say, I'll give you a hint right here that this is a 3-wave move up here for one right here. All right. Not that this is 1, 2, 3, 4, 5. We get a slight high and we break down. But I have one a little bit more bullish that says this is a 3-wave move up for one. It's going to be our ending diagonal further to the upside. And then we break down. So this would be our wave 1. And we pull back to wave 2 already. And then we go for wave 3. Okay. So there are bullish perspectives in mind. Just know that we're still in a bear structure now. And here's here I'll start to show you exactly when we have to look at more of the bullish scenarios. Either way, we're looking for a decline in the market in the long run. Okay, so what we have here is our trend down. So we redrew the channel. So it had these two touches here. We have a lot of confluence. We're back testing this uptrend line, more of a pivot. We have a point here. And it's more of a pivot at this point because we're oscillating back and forth around it. Okay, that's a huge spot here. We have confluence with the top of the channel with that uptrend. And also, I know this head and shoulders could have been drawn a couple different ways. I drew it like this before because it worked out perfectly with this top. And that's fine. You can leave it there. But there's also, if you just have these 2 points here in this consolidation here, and it works out with this top. So there's a couple things. You can kind of redraw this. It's a zone. We're at this gap here as well. We're at gap resistance. A lot of things happening here. So I think we pull back first. And that's the key in this conversation. We either go further or we get a higher low and we continue higher. But either way, we're going to trend much lower if we're bearish, or we're going to get a higher low. We're going to have a huge move to the upside. So either way, you should be, licking your lips, ready for a move, whether it's to the upside or the downside, and ready to turn on a dime. That's what's important. All right. I think we have some gaps here. We try to close this one. Maybe this is the main gap, and we'll look at some retracements on SPY. But the 200-day moving average is right here for this gap with the 20 and the 8. All this stuff is happening right here. This will be our key zone. All right. Below this zone, there's one more attempt back to the ascending triangle. Also, this line I drew right here, that is a connector, and I'll show you on my alternate bullish count. This is going to play a factor from this point. So far, it's just a pivot. There's only 2 points. But if we hold that point here and we really, really get the bears pulled in for a pullback, we get past all this, this is going to be in the next spot. That's going to be a huge, huge point. All right. 2 spots. 1, 2, period. 1. I don't think we have a little shallow pullback here to this this support. I think we go lower. Huge point here, and huge, massive below this. This is make or break. And I'll show you exactly why, and I have it drawn out perfectly a little bit later on. So don't forget to hit the notification button. We try to do these videos as often as possible. I try to talk you through what I'm thinking. All right. I post these videos, and I have green labels on my what do you call it, the not the tags, but the when I post these for you to see, I have a green label when I think we're looking for reversal or going up, and I have red when we're going down. I think we're going down in the near term, but we're going to watch these two levels. Super, super important, you guys. Next, we're going to go to the 65. I'm drawing you in for this SPX. Is super important because we have our touches here. We have our, it looks like a 5-wave move down. All right. I know that. It looks like an impulse wave down. But there's other ways you can draw it. It could be an A, B, and then 1, 2, 3, 4, 5. It doesn't violate any of the Elliott wave moves. So this could be counted as an ABC. All right. Now, what kind of gives us this question mark is, in the earlier videos, I said this has no business ripping all the way up to this point. It's still lower high, but it ripped such a huge move in the last. There are a couple different catalysts, just straight arrow to the upside. If this were to be very, very bearish, we should have seen our 1, 2, 1, 2, 1, 2 should have been pretty shallow and just, ripped to the downside. So now we have question marks up. Now, structure-wise, we're still bearish because we have a low, lower high, lower low, lower high, lower low, and we're still at a lower high. We have to break this high right here, and we're going to show it on SPY as well, but it's about this 4,400 area. That's going to be our key to this lower highs and lower lows in the ultra bearish scenario where we're 1, 2, 1, 2, 1, 2. Now I know there's another sequence where we're 1, 2, 3, 4, 5, and then we have a wave 2 pullback. Okay, who knows how deep that go? And then we had lower, but the triple Qs put a wrench in that, and I'm going to show you that later. So I don't think it's that mid situation. It's either crash from here or go make new highs. I think this is binary. I'm Xing out this mid situation where we get just a little bit higher and make a higher low, an ABC here, and then we had lower. Nothing is impossible, but that midterm thing just doesn't fit with the triple Qs. Super important. Okay, so on the 65-minute chart, you see this is the uptrend line. We broke down from it, and we're back testing that. It's simple as that. We could head lower. This could just be an extreme move because of the Fed, because of those data points. All the data is over. The Fed is over. So now they gave us a fake move and we just ripped to the downside, or like I said, we get new highs. Okay, now we're going to start to translate what we're talking about into SPY because it's super important to everybody trades SPY. So I want to show on this point of view. Okay, so we have SPY in the 65-minute. We're right at the point of control. It's been a huge spot for us. All right, so we could, we could break down from the point of control, prices attracted to it, and head back up here. But if we start making it at the point of control, we start making it support, goodbye to the upside. And to translate what we had earlier, this is our gap up here. So we have another gap. We have another little gap over here, but we have a gap here. And we're going to look on both scenarios on the Elliott wave. We should try to hold these gaps. But the second and the last hurrah would be this uptrend line here. So far, it's just a pivot. We'll really have to hold that. Okay? Not much more to put on here. I just know that we're really back testing. I could show you ES as well. And we're actually touching this trend line on ES. So I think we get our reversal really, really soon, either tomorrow or turn around Tuesday, which would make sense. Okay. Let's go ahead and do the bullish and bearish scenario on SPY, and then we'll look at QQQ. So our Elliott wave on the hourly time frame, you're going to see a few things going on here. So right now I have the bearish scenario in the white 1, 2, in the yellow 1, 2, in the blue 1, 2. That this is over. We're past the 90%. We're really trying to make a double top at this point. You see this dash line? That dash line, that's our invalidation point of our 1, 2, 1, 2, 1, 2 scenario. We get past that and invalidates, in my mind, all bearish scenarios in the very near term. All right, so we have stuff happening time-wise relationship where we have things happening on Tuesday and coming up into the weeks very soon. So we have the 13th, we have the 7th, and the 13th. We have two things coming headed here on the 7th. So turn around Tuesday, maybe something happens on Monday. It all coincides. Tuesday, we get lower. We have a time frame. We should get a reversal some here within Monday or Tuesday, according to our time and price relationship. And then I don't have retracements here because this is our bearish scenario. We should just head lower. Okay. Remember, I'm not doing the midterm, where this is the midterm, where if you count this as 5 waves, we come into the 50% right here coinciding with the 90%, and then you have the 62% where we get over here, but we actually have 62% of retracement from this move all the way up to 78.6. I'm not paying attention to that right now. I did keep it on there. I have to. But what we're going to look into now is the alternate. And the alternate says that we had our wave 3 and we're going to wave 4. We have the A, B, C down for wave 4. And this is our first impulse wave up. So I get to update this where this is a wave 1 coming into here. All right, so we'll do this in a different color. But here, let me duplicate. So what we're looking at is this being a wave 1, even if we end up just a little bit higher. We're going to make it smaller. We're going to go with yellow. Okay. So our wave 1, and we're looking for a wave 2 pullback. So that pullback, and I'll show you the bigger picture real quick. See what I have here? Well, I have a 1. It actually, let me scratch that. A, because I'm calling this an ending diagonal where we have 1, 2, 3, 4, and all these are 3-wave moves. So ABC into 1, ABC into 2, ABC into 3, ABC into 4. And now we're doing A, which that was my move for A. Look how close that was up there. We're making a inverse, or excuse me, a head and shoulders. Yeah, inverse head and shoulders. So that would be A. Now we're looking for the pullback for B. Now you see this trend line? Super important. This will be ultra important for this bullish scenario, for this to hold. Now this is an expanding ending diagonal. So the end of wave 1 to 3 should give us the rough target of wave 5. Shall we continue up? So this is expanding. You see how this is expanding here? We have wave 1, which is one size. Wave 3, which is larger. Wave 4 is bigger than the wave 2. And now we're looking for a much larger wave 5, which, since wave 3 is not the smallest, wave 5 can go on as long as it needs to. Okay? There will be some reference to ratio and stuff like that. But on a daily time frame, it's a little bit easier. I'm going to draw the retracement here in just a second. But just notice that from the move from the bottom here to wave 3, I think that's where we're doing. I'm sorry. we already did wave 1, 2. So the bottom of wave 2 to the top of wave 3, we're already at the 62% retracement. So clearly we're crossing over from wave 1, which would give us the ending diagonal, which is expanding at this point. We're perfectly at that 62% retracement. And so I drew a line, a pivot right here, got our A wave up. Now we're looking for a B wave down. And what better point would be about the 420 area, which was very important to us before. We talked about it in earlier videos, which is a 50% retracement. So keep this 50% retracement for a pullback should be very important. So let's go back down to the 65. So we're looking for a pullback. Here's your 50% retracement. It's in a very light yellow there, around the 420. Yes, it's underneath that gap. Now let's draw our retracement. We're going to keep this on here for purposes for pullbacks. Yes. If we pull back right from this point here, if we open up underneath or at this point, our retracements are going to be, and this is A. I know B is out of the picture there. It's for a bigger time frame kind of point of view. Our B should come back likely to the 62% retracement. And that coincides perfectly with the 50%. All right, so that's a fabulous pullback. This will be a key point for us. Maybe spike down, try to get that gap right below. That'll be a key point for us right here. The 420 area is going to be key support. We're really gonna eye this 420. It's gonna be so important for us. Wave A, if wave A is in, let's go ahead and bring this wave B. We'll change our projections here down to the 62%. This is the bullish scenario. We already got our wave A in. Let's go ahead and get rid of that point. Now, since it was so sharp to the upside, wave B to that 50% retracement, and it's still holding this trend line here. Maybe it spikes down to the trend line. Maybe it takes time. This is a wave B. If we're bullish, the wave B can be anything. It can be a flat pattern. It can be a triangle. It can keep us holding on for some sort of catalyst to the upside. So it's not just going to be necessarily a sharp B. It could be. Just watch out for this 50% and this uptrend line. Seems to be the area for the bulls. All right, you break down from these areas. Goodbye to the bullish scenario. All right, so if they make it sharp, a sharp pullback, then we're going to get all bearish. Everybody's going to get bearish. And we're going to look out for this, and we're going to know if we get a nice doji candle off of it and a push off of it, especially if we have a catalyst near here. Okay, so keep that in mind. We have to keep that in mind. And staying on the daily, it's an expanded flat. We hold the trend line. We hold that 50% nearly. We could spike down. We have the 786 as well. If this happens to be super sharp, where wave B just immediately on Monday or Tuesday going into this week, we have the 786 that coincides with this pivot here if it's so sharp and it just comes straight down into it. All right, if it takes a little more time for wave B, maybe it oscillates back and forth, but this is the low and we get some sort of triangle and it finally makes it to this trend line and then goes off of here. Wave B is unpredictable. That's the moral of this story. Now, we spent a lot of time on that. We already know the bear scenario, and that's just that we don't get above the 4,400 area, and this one, 438 on SPY. Now we can concentrate a little bit on the Qs. It's all about structure here, folks. Let's start off with the daily, and then we'll move down. Okay, so we have this channel here that could be a bear flag. That's a bullish scenario. Looking at this, a bear flag. But remember, this wave 3, this can't be a 1, 2, 3, 4, 5 because wave 3 is the smallest here. We measured it. We talked about it many of times. So this cannot be a 5-wave move down. Period. This can be a WXY, ABC, however you want to do a correction. And the bearish is a 1, 2, 1, 2, 1, 2. All right, we're at resistance. We have just a little bit of room to go to the upside if we want to make a doji or something like that on Monday. So we have the make or break point. I think we get a pullback from this area, and we want to make a higher low. Now, where does that higher low consist of? Well, our moving averages are way up higher. So QQQ, if it's stronger, doesn't necessarily have to make such a new low. If it leads to the downside, yeah, of course, it can come down to the 200, the channel. We have support underneath here. We have lower to go. But we want to keep in mind that we're either going to make a higher low and move higher, break out from the channel and head higher. And we'll look at the scenarios again from this perspective. I'm not even going to go to the 65 on this one. I'm just going to go straight to the Elliott wave scenarios here, where this is the bearish scenario. We have in the white 1, 2, in the yellow 1, 2, in the blue 1, 2. That's super bearish. This is our breaking point and validation for that bearish scenario. We don't have a middle scenario. If we have an A and a shorter B and C, that just means we're correcting anyway. And we're moving the upside, but I don't see that in SPY. We're either at a major top. I just don't see it being, hey, we have just a little correction, which would give us a much more bullish scenario where this would probably be a 1 ABC for 2, much higher. Okay, so we'll figure out all these things when it happens, but that gives us a way more bullish scenario. I just don't see that happening. I see this as a 1, 2, 1, 2, 1, 2 for the bullish or for the bearish, deep bearish scenario, or I'll show you the alt in just a second. But all of these retracements are so deep, so deep. So, that's it. We've showed this many times. We're looking for much lower prices. If this is a bearish scenario, we should cut right down low really fast. So it being the alternate scenario, I'm going to pull back here just a little bit more. We showed this the other day. This is more of a 1, 2, 1, 2. This isn't an ending diagonal in this situation. This is a 1, 2, 1, 2, 3, 4, and then we get a 5, 4, 5. So we have a lot higher to go. This is much more bullish. The tech stocks are going to lead. We have our 382 retracement here for that wave 4, typical. And we're going to break out from this possible bear flag. Now, going in just a little bit deeper, we have to pull our retracements out and kind of follow what's happening here. We're going to add a retracement where this is going to be not a wave A like we have in SPY, but a wave 1. Now, I know that this can be a impulse wave up for the yellow wave 5 to end, and then we can have an ending diagonal there. But this is going to be a 1. This can be wave 1 if we're bullish. This wave 2, we're probably going to pull back into this 355, 352 area. All right. Now, our moving averages are kind of moving sideways, so it's not going to hold us back very much. We could find a dip buy on, 355. It could be a little sharper down to 382 again, retest the 382. So we have a lot of levels we can go here, but even if we want to go further, it's just QQQ should be leading us to the upside if we are bullish. I don't think if we're more bullish and Qs are holding up, we shouldn't go back down lower. Shouldn't happen that way. We have an ABC or WXY, however you want to call it. This would be an ABC here, an ABC up, and then a double zigzag ABC there for WXY. Yes, we can count it that way. But this impulse move up should be a wave 1. So let's go ahead and add that in there. We'll make this a smaller. I have a different color on, so we're going to make this one a different color for wave 1. Red, why not? Oops. Okay, and then we'll be looking for a wave 2 pullback for the bullish scenario. So basically, you guys, once we get to this territory around the 62%, anywhere down here, we're going to start taking off some of our position. We know that we're getting the reversal sometime soon. We have plenty of put plays on for plenty of time on there. We're going to start taking a little bit off and start hedging to the upside. We're still bearish. It's a bearish structure. We have lower high, lower low, lower high, lower low, lower high, lower low, and we're still making a lower high. It's a bearish structure. So we're going to keep our bearish plays on, take a little bit off the near term, and give us some reversal possible call protection to the upside. Okay, and see where price goes from there. We get a nice doji off of the 62%. I mean, we might reverse our situation. We'll look at the indicators and everything, but that pretty much says what we're looking for. Ultimately, you got to put your trader hat. You got to look for that higher low. You got to look to see if we rip through it. If we have the VIX here, that's the last thing I want to show you, and then we'll end this video. No, it's long. Look at that. We have a falling wedge on the VIX. We had a low here. This is a possible leading diagonal for 1. We might be getting a wave 2 pullback, back testing this wedge breakout and heading much higher. And I know you see the falling wedge, but that would be our leading diagonal here. Could have been just a corrective move. We're right in limbo. You can look at it both ways. We're back testing this wedge. Maybe we get a bounce and we just continue lower. But back testing this falling wedge, breaking out. If this is a leading diagonal, meaning a 1, 2, 3, 4, and 5, all 3 wave moves, we get a wave 2 pullback. We already have a ABC here. We're breaking through support, but we're back testing the wedge. This thing could rip to the upside. Now we're gonna have to get. We already have all the Fed and stuff like that, so we're gonna really have to get some sort of catalyst to really make this a lot more bearish, because we're firming up to the bullish side. That's what I'm trying to say. And so the VIX says, hey, we're back testing, we can go higher. And I just want to be aware, make you aware that either direction could go at this point. Super, super exciting, because either direction that you see it start to go, we get it back above this 200-day moving average. And remember, this is 50. It's starting to break down now. But if we get back above that 200, I almost guarantee this is going to cross, and we're going to get our bearish scenarios on the indexes, on the indices. So we're at this critical point, and I don't care which way it goes. I'm going to ride it each way it goes. We start getting the higher low, you better believe we're going to the upside, and always protect your positions when you're not sure. So, all right. So that's what I have for you. Appreciate you sticking around. Don't forget to like the video. If you want to help out in any other way, look down in the description, and we will do another video tomorrow, and we'll try to match what we're talking about, and we'll do both situations where we're going to check out the bullish and the bearish with big tech. We'll put out both situations with big tech tomorrow. All right. Thanks for sticking around. Talk to you soon. Have a good night. Thanks for joining us at Options Center.